the Bitcoin lobby, join with the crypto lobby, join with the Wall Street lobby, join with the banking lobby, all to clamor for banks to adopt Bitcoin and custody their own keys. Right? I mean, think about that. It's a really cool thing that we'll actually see Bitcoin become a settlement network and become a reserve asset for the banking system of the world. And
crypto analytics firm says that the price of Ethereum will likely be affected by ETF inflows in the next few days. This is because buyers will remember how little demand there was for futures products in late 2023. The start of the futures-based Ethereum ETF in the US at the end of last year didn't get a lot of attention, as Kao said. All eyes are on the spot ETF launch with high hopes on quick asset accumulation. Kai, Kiko's head of indexes, will write about the market on July 22nd. However, a full picture of demand might not come out for a few months. The price of Ethereum could be affected by the number of new investors in the first few days. Several spot Ethereum ETFs got final approval on July 22nd and are set to begin trading on July 23rd. According to Kai, one of the most clear things that will happen to the price is that money could leave the Grayscale Ethereum Trust, just like it did with the Grayscale Bitcoin Trust. ETA is a fund that gives institutional buyers access to Ethereum. However, its shares are locked up for 6 months. Because ETH will be easier to buy and sell now that it is a spot ETF, many buyers who bought ETH shares will probably try to cash them out as soon as trading starts on July 23rd. In the past few weeks, ETH's discount to its net asset value has closed. From February to May, it grew wider.
I'm pleasantly surprised at the rate of Bitcoin adoption and the political acceptance. When I started in 2020, I didn't expect that we would have so much progress in the area of, say, spot ETFs. I mean, the spot ETF was a great windfall. Fair value accounting is a second windfall. The political sentiment and the drive to allow banks to custody Bitcoin is a third really pleasant surprise. The fact that that Trump has come out so positively in favor of Bitcoin is a fourth surprise, a pleasant one at that. But it's not unreasonable, right? This is the digital transformation of capital. We're going to go from 0.1% of the capital to 20% of the capital in the world, or 30% of the capital in the world digital. So it's happening. It's rational. Anyone that cares about capital markets, cares about money, cares about the economy, cares about technology should embrace it. But nevertheless, when it actually does happen, when you see the Bitcoin lobby join with the crypto lobby, join with the Wall Street lobby, join with the banking lobby, all to clamor for banks to adopt Bitcoin and custody their own keys, right? I mean, think about that. It's a really cool thing that we'll actually see Bitcoin become a settlement network and become a reserve asset for the banking system of the world. And you know, we're not quite there yet, but you can see the writing is on the wall, and the most progressive politicians are seeing that this is in the national interest. The years from 2024 to 2034 for digital money are the real high growth disruptive years, and the year from 2024 to 2034 for digital intelligence, probably the same thing, right? This is the decade of digital capital, and I use the word capital because money, sometimes people think, well, is that the currency, or is that the store? Is it the medium of exchange or the store of value? I would say the real disruptive change right now is Bitcoin will emerge as the store of value, digital capital, and what's that worth? Hundreds of trillions of dollars is what it's worth. It's worth a lot, and that's a very hard driving trend. You know, with regard to S-curves, normally the year before the S-curve kicks in, everybody thinks it's not possible, right? In 1903, before the Wright brothers flew, the New York Times had front page article saying, you know, experts show why flight is impossible, will never be achieved, right? So, you know, with AI, people working on AI since I was at MIT, and you know, Apple pointed out Siri is like whatever, more than 10 years old, and yet it's, you know, the early versions of Siri and Alexa were like used to pick your playlist, you know, on your music streaming service, but not for a lot more than that. And it was really just with ChatGPT-4 that you saw this first massive commercially viable thing. They went from 0 to 100 million users in a month. It's like, and everyone that was skeptical of AI, they use that, and they're not skeptical anymore. They're like, oh, I get it. That works, right? That works. And the killer app for digital capital is these spot ETFs, you know, and they got approved in January of this year. And there are hundreds of millions of dollars a day flowing into these things. And there's $1 billion a day of trades.
The diminishing discount means traders bought ETH below par and will redeem these shares at the net asset value price on conversion to generate gains, lowering his approval hopes. All spot Bitcoin ETFs dramatically impacted price in the months following your inception, thus there's less confidence that Ethereum ETF will be as popular. Wintermute, a market maker, noted in a July 21st research paper that it anticipates the Ethereum ETF to produce between $3.2 billion and $4 billion in inflows in its first year. The firm expects that Bitcoin ETF will create $32 billion in assets by 2024, with first-year inflows of 10% to 12%. Spot Bitcoin ETF flows. Wintermute predicts 2024 Ethereum price increases of little more than 24%. BlackRock location, the Bitcoin exchange traded fund, saw its greatest day of inflows in 4 months on Monday, with $523 million. According to Apollo data cited by its co-founder in a July 23rd ex-post, the iShares Bitcoin Trust ETF bought 7,759 Bitcoin on July 22nd worth $523 million. This brings IBIT's total assets under management to 333,000 BTC worth $22 billion at current prices. It was the 7th highest day for us IBIT inflows. On March 18th, $849 million worth of BTC was added to IBIT, its greatest single day of inflows. On March 5th, $788 million was added, its second largest day.
On those ETF layers in the first year, right? So that's only going to accelerate. And I think that that with regard to, you know, the spot ETFs, they catalyzed corporate and institutional adoption of digital money. And you see, you know, examples like BlackRock has days when they buy hundreds of millions of dollars of Bitcoin. You see institutional hedge funds hold $1 billion or $2 billion worth of Bitcoin via these ETFs. And you see, you know, pension funds, the Wisconsin Pension Fund allocates $170 billion or something like that to buy Bitcoin. And then they go, oh yeah, that's 0.1%. We need it to be 1% to move the needle. So we dip our toe in the water, but you realize now institutions, corporations are moving in size that is order of magnitude and 2 orders of magnitude greater than was going on before. That's going to continue aggressively for the next decade. And that is the Bitcoin gold rush. I mean, the reason that's the gold rush is because by 2035, 99% of the Bitcoin will have been mined. So right now is the time when you've got natural sellers. You've got 450 Bitcoin available a day to buy from someone that might want to sell it to you, right? And when that supply gets cut off, the only way you're going to get Bitcoin is to take the price up and get it from an unwilling seller by bribing them with a high price increase. So this is the gold rush for Bitcoin because you've got the institutional endorsement, you've got the regulatory endorsement, you've got the banks clamoring to get in. Some are already getting in. The news this week was the largest bank in Brazil. In fact, the largest bank in South America is Bank Itaú, has announced that their customers can buy, sell, and custody Bitcoin with the bank. Imagine if JP Morgan said, hey, all of our customers can buy, sell, and custody Bitcoin with our bank. Well, that's what happened in Brazil, right? So you can see all these dominoes falling. Every quarter, for the next 40 quarters, you're going to see more banks embrace Bitcoin. You're going to see more Wall Street firms. You're going to see more institutions step up. You're going to see more companies like Saylor Scientific. You're going to see, I mean, this week, MicroStrategy went out to raise a bond offering, and we started at 500 million, and then we just upped it to 700 million. So in one day, we increased our capital financing by $200 million in a day, right? And we're going to go raise $700 million and buy Bitcoin with it. And so these are major chunks of capital that are moving, and they're flowing from the analog to the digital, from the 20th century to the 21st century, from the traditional to the progressive capital market. If you look at that same trend in digital intelligence, it's pretty clear everybody's going to start using some AI tool. You know, Microsoft is going to bundle in some AI tool like Copilot, and pretty soon every white-collar worker with Microsoft Office is going to be using some kind of AI Copilot of some sort. It's going to spread like wildfire to 1 billion people, and then pretty much every white-collar worker will have to have it. And from there, it's, you know, the first step will be every white-collar worker uses it. The next step will be it gets embedded in every product. You know, like it's being embedded in Adobe, it's embedded in the graphic design tools and the writing tools and the math tools, etc. The next step will be your car will drive itself. It'll be embedded in a physical product. Then it will be embedded into robots. It'll be embedded into factories. It'll have a profound disruptive effect, and it's hard to calculate. So imagine $350 billion changes the world, except with this one observation that I think you can make. And that observation is digital intelligence is going to do a lot of work. It's going to do a lot of work that humans used to have to do. So if you have an economy and you have 10,000 workers, and then you have capital equal to 10,000 workers.
On the same day that a list of spot Ethereum ETFs were authorized for trading in the United States, BlackRock's fund received a significant amount of money, according to statistics from Farside investors. According to market analysts, the spot Ethereum ETF is expected to produce between 10% and 20% of the flows produced by the spot Bitcoin ETF since its January launch. At the Bitcoin 2024 conference in Nashville, Marcus Thelen, the founder of 10x Research, believed there was a good potential that Republican nominee Donald Trump would surprise everyone by declaring that he would turn Bitcoin into a strategic reserve asset. According to Tennessee on July 25th, this might lead to a significant spike in the price of Bitcoin over the next weeks. According to Brian Sess, the founder of the cryptocurrency asset management firm Dime, there was a strong possibility that Trump will designate Bitcoin as a strategic reserve asset during the meeting on July 22nd.